Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at Brevant.com/wins.
And welcome to Markets Now. I'm Michelle Rourke with Mike Miner of Professional Ag Marketing. You've got row crops and the livestock futures all kind of in the green here this morning. And Mike, let's talk first of all, the little bounce that we're seeing in corn and soybeans. How much of it is technical?
I think a lot of it, especially on the soybean side, is technical. We bounced off some moving averages, a very similar pattern that we've had the last few trading sessions. In this range, I think it's been pretty tight here. You're really looking at the WSDA report tomorrow to try to break us out of this range, I think, personally.
Okay, so let's talk about the report here. Expectations are that we're going to see maybe a 3 bushel acre decrease in yield. But is it possible that with the history that we have for this report, that USDA could actually increase corn yields?
Well, if you look at last year, I personally believe with the weather pattern we had last year, we shrunk the crop more obviously quicker. And we actually increased yield in the September report from the August report from a 183.1 to a 183.6. So I was a little surprised that the top end of the range was only zero point 0.2 higher on this report. I thought somebody out there would still think, just given what the USDA looks at, that you could potentially see an increased yield month over month. Now, do we think we'll end up there in January? Probably not. But in the meantime, at least we know how the USDA works.
Because they're using things like ear counts, but maybe not test weights. Is that right?
Exactly. They still use things like weather models. They still use things like satellite imagery, farmer surveys, which can all weigh things differently. And then obviously, when you're looking at the ear kernel counts, that can be a very different story than test weight, which, in my opinion, I think could still help them a little bit in the Eastern Corn Belt find some lower yields with lower kernel counts. But overall, that maybe doesn't truly show the disease problem that we've had throughout Iowa, for example.
Right. And that really comes from the test weight data, which a lot of that we're not going to get maybe until we get these combines rolling. Illinois, Iowa, those are the big states we're going to be watching. Is that right?
Pretty much. I think the small branch off into the Dakotas and Minnesota, I think there's just maybe not quite enough disease pressure to pull those back, but maybe just a little bit. Like Minnesota's probably not over 200 bushel yield anymore, probably mid 90s. So things like that. But Iowa for sure, all over that, and then for sure parts of Illinois as well.
So, Mike, if we do not get a decrease in yield as the average trade guess is expecting, does the market go down or does it not believe it, like we didn't believe the August report?
I think it would go down enough to really violate some of these, the 50, the 20-day moving average, the bottom trend line that we've been really bouncing off of on this corn market since putting in the lows back in the last WSDA report, August 12th. So I really think that it'd be enough short term to wreck and do some damage technically, that I think it'd be pretty discouraging to the futures trade. How long they want to trade the news is probably short, but I think technically it could do enough damage to really screw some things up in the meantime.
Right. Soybeans we're looking at, or at least the trade guess is just showing a minimal loss. Is it possible there maybe USDA doesn't change it at all, or could that go up?
Soybeans are always hard. Soybeans are made in the month of August, which we just got through. There were a lot of folks with good rain amounts, so we should have some bigger beans in areas in the Western Corn Belt. The Eastern Corn Belt, though, I mean, it was some of the driest weather in the Eastern Corn Belt that we've had in August almost ever. So from that perspective, we should see some shrinking of August yields in that Eastern Corn Belt, I think, to help a little bit on this pullback on soybeans, but I think the Western Corn Belt's rainfall totals are going to hold things up a little bit.
Yeah, and the tricky part about that is I think last year we had one of the driest August, September time periods in like 40 years. And we were disappointed because USDA didn't lower yields on corn and beans in the September report, right?
Exactly. So when I look back at what they could do in tomorrow's report, some recency bias is probably making me wait a little bit on just saying, yeah, we're going to pull yields down a heck of a lot in this report.
Does USDA make any demand adjustments, do you think, on this report for either corn or soybeans?
If you do lower corn yield to like a 186 like they're expecting, I think you take demand out of corn from the feed and residual category quite easily. Maybe a smidge from the ethanol side. I'd be surprised if they moved much on ethanol or exports in this report. I think it's a feed and residual number that they call the slush fund, basically, that they're just going to pull out of what they need to try to keep the ending stocks on corn right around 2 billion bushels. China, no real popping up on the export still for soybeans. I know that's been the talk of the town. At what point is the USDA going to fully adjust their WASDE report, their balance sheet for the U.S. because of that? Who knows? I mean, measly little purchase here this morning, but other than that, the USDA is just we're waiting to see when they're going to take that export number out. And that would grow the balance sheet dramatically if they actually get pretty current with it. But at this point, there's too many unknowns. And when there's too many unknowns, they kind of just leave things where they're at.
Yeah, but even if you took 2 bushels off of yield, and took China out of the picture, prices would still have to go down, wouldn't they?
I sure think so. I think your balance sheet looks really ugly at that point. 1 in 4 soybeans still goes to the China from the United States today. It's still too much. They're too big of a player yet, and it's dramatic. I mean, when you just completely cut off cold turkey like that, it really messes things up logistically. That's mainly a Northwest Corn Belt problem, and you can see it in basis levels in North Dakota today and South Dakota, for example. It could be a little worse, probably. But I think logistically, it makes a very big problem for the Northwest Corn Belt, and that's my opinion on it, I guess.
Right. All right, go back and explain this. We said no new crop sales of soybeans to China so far, but there was a shipment. So explain, was that a shift from unknown purchases or what was it?
Yeah, I haven't seen much on it. Just this morning, 67,000 popped up on the soybeans export sheet for sales there and shipments. So when I look at that number, I could say, well, it was somebody forgot to click the unknown button or the wrong button there from the USDA or something, which we've seen that before, but no word on that yet. And other than that, I mean, we did start a new marketing year now. We're in a new marketing year, which it could have had some pull over or spill over from last year's for that example. So it's a measly, minor, very small amount. So I don't want to get too caught up in the numbers. I know we're up a little bit today, and China popped on the soybean export report this morning. So maybe be a little cautious there. But I think technically that's probably why soybeans ran higher. But it was interesting to see them pop up in there this morning, Michelle.
For sure. 140, almost 143 million bushels of new crop exports to unknown destinations so far. How much of that could be China?
It should be a good amount. I mean, one way or another, it's probably going to try to find its way into China. When I look at that unknown number, historically, it's very largely China. They are competitively priced out of the United States to China, especially if you take some of the tariff out of it. So if they can find a way to backdoor it through, which we know they're known for, they probably got some bought through other avenues or channels.
Okay, as long as we're talking about China, they also showed up on the export report for pork this morning, which confused me because the government says they want production to be lowered. If production is so heavy, why are they buying US pork?
I would have to say it's logistically. I don't see any other reason. I don't see this as a giant trend that's going to start. Like you said, they're trying to take down their own production numbers. Why would they start importing protein from basically the highest priced in the world source? So, not necessarily on pork individually, but I just mean in general. We have incredibly short numbers for protein in the United States. So, when I look at it from that perspective, globally, sure, protein levels are down on supply side for everyone. We have very low numbers for cattle and hogs. So when I look at it from that perspective, sure, there could be some reserve filling. There could be logistically some risk management practices occurring with countries trying to make sure just with low levels of supply globally, we've got to maintain our reserves and make sure from that perspective. But otherwise, I don't see this as a true tell sign that something's going on from my perspective, Michelle.
Okay. Hogs, though, October up into contract high areas. And, do you think that's all technical buying at this point? Because the funds have really piled in here.
Funds have piled in the front month, and I would say when I look at the back months there, they haven't moved a lot. They were red a little bit while October was catching up to the index, and I think that's the difference. You're at a $10 spread to the index with October. Something's had to give there. October's been trying to make up that difference on futures here this week so far, and I feel like it was pretty obvious the way it was trading. The difference between October and the next month has been substantial this week in trading patterns. So I feel like it's more of just catching up with current fundamentals, Michelle, here. And if funds are piling in a little bit into the hog market, sure, they'd be in the first 2 months, probably three max. So that'll be something I'm watching too.
But you're also watching the fact that weights are going up, right?
Yeah. So we're probably underkilling supply at this point. Weights have been rising probably slightly ahead of normal than they normally do, but pretty seasonally. So from that perspective, at least I'm watching numbers. Are we backing these things up? We've had lately about 2% less kill year over year for the weekly data, at least this current week, about 2%. So that's kind of what I'm focusing on fundamentally in this hog market. But product values are still hanging in there. They're impressive at 114, 115
Yeah.
type area lately for cutout. And, we think that'll change at some point. I think that the increase in kills after Labor Day here that we're starting to see will finally start to kind of hit this product market at some point here. So we'll see if that can tip over this cutout just a little bit going forward. Till this point, it's been very positive news that we've held at this level.
And cattle trying to heal the last 2 days here. Mike, do you think we can continue to recover or not?
You know, trying to recover, you had a one-off sell day. If I was looking at this market and that's all I saw, I would say it's very similar to the setbacks we've had in recent history. You have a big correction just from the top of the Bollinger Band back to some moving averages. We kind of go steady and then run higher, like very technically similar to what we've had in this uptrend thus far. Now, if I include cash, then it changes things because we are lower this week, $5 cheaper probably week over week, and the Packers are actually buying cattle there. So there's some weakness in that, and I don't want to skip over that. I want to continue to watch that aggressively because that's a little bit of a change in pace.
Yeah, and that was led by losses in the north, actually. And that's where the premium was. That's kind of where the cash led rally started. So I think it's a great point that you make. Lots of talk this week about this annual payroll number going down over 900,000 or being revised. Trump talking about cheaper beef. Do you think those had an influence or a role?
I feel like the cheaper beef did. There was some volatility through the stock market. You had the jobs report. Some of that maybe created uncertainty, but until this point, we have not seen uncertainty in the equities really have that much of an impact on the beef market. Yes, they've correlated very strongly with one another, the S&P and cattle futures, for example. But I feel like the cattle market hasn't had nearly the volatility or setback that the S&P 500 has on some of these breaks. And I would say, sure, Trump coming out and saying that he wanted cheaper beef and our policies are going to make that happen. Maybe the way the futures traded with lower back months were suggesting they were trading a Mexican border reopening, something along those lines, or taking tariffs off Brazil's beef. But up until this point, his policies, my goodness, I mean, we're putting imports up to 50% now plus on our largest importer into the United States of beef, and we cut off our feeder cattle supply from another country. So it's like, okay, so far those policies have not made this market more bearish, Michelle.
Yeah, and Trump said that on Monday, and the sell-off was on Tuesday, so I didn't buy that part either.
Yeah.
Is the top end, do you think? And even if it is, does it matter because we could stay at high price levels for a while?
I saw cutout set back a little bit now, probably seasonally right up there with the level that it should be for a high time of the year, starting to set back. So maybe that'll be something to watch for is the top really in or not, because the Packers have good margins now. I mean, better margins, I should say. Cutouts held high, ran up. Cash is pulling back a little bit. They've got a little bit more leverage than they did before. So maybe they'll increase some kills here because at this point they really haven't. So that's something I'm watching with it. The funds are obviously heavy long proteins. Are they going to want to get out anytime soon? We're going to need some shakiness in
Yeah.
consumer sentiment, I think, to get that.
All right. Thanks so much, Mike Feiner with Professional Ag Marketing. That is Markets Now.
When you choose Brevant seeds, you don't just win. You win so big, the very ground beneath your feet cries tears of joy. You win so big that second place feels like a participation trophy. You win so big, you might as well be harvesting buried treasure. Oh, sorry, just one more. When you choose Brevant seeds, you don't just win. You hit the damn jackpot. Don't just win. Win. Talk with your retailer or visit Brevant.com/jackpot to get started.